Hi everyone and welcome to today's morning report with me, Richard Perry, market analyst at Tech Markets for Friday the 27th of June. The European trading session has started reasonably positive, and that's come amid a gradual improvement during the session yesterday, following on from early losses on the Wall Street indices that we saw yesterday. That came despite the fact that we had some hawkish comments from Fed member James Bullard, but to be honest, he's a non-voting member, and also he's a known hawk on the Fed anyway. And his comments that he could see possible rate rises in the States towards the end of the first quarter 2015 is not really anything new. And to be honest, his comments have largely been discounted or already priced into the market anyway. So nothing really to go on there. But overnight we saw significant jump in Japanese CPI, and that is now to a 32-year high. Now, just quickly show you that that's a 32-year high for the Japanese inflation. Now that is an incredible move, and shows that the Abenomics is starting to do some improvements in certainly the inflation. And our Prime Minister Abe himself has come out and said that deflation is no longer an issue in Japan. So we'll wait and see if that actually does remain true. But certainly at the moment, the spike higher in inflation is a positive for the Japanese markets, or certainly economy anyway. But the Nikkei tends to not really move in the same direction as the Japanese currency, because the yen has strengthened on the back of this inflation jump, and subsequently the Nikkei is around about 1.4% lower on the close on the day. So you do tend to find that the Nikkei and the yen tend to move in opposite directions, and that's what we've seen overnight. In terms of currencies today, you've got the dollar remaining under pressure. That yen strength is one of the main elements to that pressure that the dollar is under today. But that's over the last few days. Zooming slightly here, you can see this continued downside that the dollar is under, and that has come as the euro has gradually gained. Sterling has pushed back above $1.70 again, and the yen is back well below that 102 pivot level, so 101.40 now trading on the day for the yen. So strong move against the dollar in the last few days, and that's continued today. In terms of economic announcements today, you've got the final reading of UK GDP for the first quarter. It's expected to come in again at 3.1% for the year annualised, and that's 0.8% quarter on quarter for the first quarter GDP for the UK. So that's expected to be in line at 9:30. And also you've got the University of Michigan sentiment, and that's at 2:55 UK time, expected to improve slightly to 82 from the previous 81.2. Okay, so my chart of the day is dollar Swiss, and the Swissy has now, I said to you earlier about the fact that the dollar has been falling away, and I think that the Swissy is now putting pressure on this key support at 89.06, and that's been happening over the last few days. And I think that that support is rather symbolic of the dollar at the moment, and certainly if that were to be breached and a move back below this 89 level, which has proved to be support and resistance on several occasions across the last few months, it's now been the basis of support. And that if that level were to be breached, I think to the downside, that would be certainly indicative of this weakness that we're seeing in the dollar. So that level is coming under pressure over the past few days. You've seen on this chart though that this 144-day moving average, which has been a pretty decent gauge for the dollar Swissy over the past few months, acting as support and resistance throughout the first few months of the year, and now turned into support. So again, that is back to where we are trading at the moment. 89.09 is that 144-day moving average, using as a bit of support at the moment. But certainly early in the trading today, we're seeing a little bit of positivity actually for the dollar just in the last few minutes actually. But you can see over the last few days that rallies have been sold into. You've got a series of lower highs here, and that suggests we're going to get pressure on this 89.06 support that has been providing the floor throughout June, and I think that could be seen as we go on today and possibly into Monday. So that is a key, as I said, that's a key level on this chart. To break down, that would also complete a double top pattern as well, and that would suggest we're certainly going to come back towards the test of that high, that old high at 18.861, and also further downside as well within this move, probably back towards that 88 big figure mark, which would be around about where the downside target from that top pattern would be anyway. So we wait and see if this plays out. Certainly it looks like you're going to get further pressure on this 89 as key support on dollar Swiss. Anyway, I wish you good luck in your trading today on dollar Swissy and whenever you choose to be trading, and I will speak to you later. Thank you.